Okay guys, turning to the pound for the week ahead focus. Now, until recently, we've seen sterling enjoy quite a push to the upside against the majority of majors. However, as the latest round of Brexit negotiations kicked off, we did see that optimism start to fade. It wasn't really just the negotiations itself, because that has arguably been an ongoing failure now without any progress made over the last few weeks and months. But the catalyst for the recent downside was first driven by some downside in the euro and strength in the dollar. And then this week was exacerbated by the announcement of the UK's internal market bill. Now, the bill basically sent pound tumbling as it sees the UK planning to override some parts of the withdrawal agreement that deals with the Northern Ireland Protocol, as well as some elements of state aid. Now, the bill was a bold move here by the UK government, seen by many as a last attempt to muscle the EU into a deal. But seeing the reaction that the bill has evoked, it might backfire and see negotiations break down. Now, as one would expect, the EU voiced their concern about the bill as it would see the UK break international law, and the move also saw backlash from the US side, interestingly, where House Speaker Nancy Pelosi said that the bill would make a trade deal between the US and the UK impossible. Now, in the week ahead, the attention will remain firmly on further developments between the two sides as we head closer to those important October deadlines and month-end deadline that the EU has given the UK to remove the parts of the bill that would break the withdrawal agreement. Now, the week ahead, there's a lot of things we need to focus on. There is some data points. There is the BOE policy meeting as well, but the main focus will remain on Brexit. Now, before last week, arguably the markets didn't price in any real risk of a no deal. If we compare that to the 5% risk premium that was priced into the pound in 2019 during the withdrawal agreement negotiations, we haven't really seen that in the last few weeks. But it does seem that the markets have now quickly started to price in the risk again. And ING Investment Bank estimates that the recent moves is potentially about a 3% risk premium that's already been built in. Now, if we compare that to the 2019 data and that risk premium, we still have some more pain yet to come for sterling. So definitely something to focus on. Now, the biggest focus this week will arguably be the upcoming parliamentary debate of the new internal market bill. Now, as opposed to 2019, the government does hold a majority. So consensus does expect the government won't really have any difficulty to get the bill through the House of Commons. But there is some speculation that the House of Lords might not be so easily convinced, since the bill would essentially break international law, even if it is for a very specific and limited way, according to some government officials. Now, as the bill would grant power to the government to break international law and override certain parts of the withdrawal agreement, this has placed a tremendous burden on the trade talks, and focus will be on how Brussels reacts to any further developments, especially from the two houses. Now, for now, the EU has given the UK an ultimatum of month-end, so end of September, to scrap or rectify the contentious parts of the bill. And if the two houses offer no resistance to the bill, we can expect that to continue to basically increase the risk of a no deal, and will continue to add pressure on the pound in the short term. Now, to make matters even worse, there's also news over the weekend of how the UK plans to respond reciprocally if a failed deal eventually leads to a possible trade war or tariff war. According to sources, the UK government would look to target popular EU brands in the event of a tariff war or a trade war. Think of BMW, Mercedes, French wine, etc. And even though some reports have suggested that such a trade war would hit the EU more than the UK, the idea of a full-blown trade war between them will be negative for both currencies. Now, also in the week ahead, we have the BOE. There's currently no expectations for the bank to make any material changes to their current policy. The big focus will once again be on negative interest rates. The bank has previously stated that negative rates are in their toolbox, but that QE would be a preferred tool to use if further stimulus will be required. Now, with all the Brexit uncertainty, the bank will probably take this as a wait-and-see meeting, which means that the November meeting will be a critical one, as we'll probably know by then whether it's a deal or a no-deal scenario. Now, with all the stress still expected for the UK economy when things like the furlough scheme eventually comes to an end, and with the current rebound in data expected to slow in the coming months, there's a lot of reasons to try and reach a deal, not only from the UK side, but also from the EU side. So just like in 2019, it does seem that if a deal is still possible, it will most likely once again come down to the wire. And until then, we would expect the pressure to remain on the pound, but we do need to keep our eyes and ears open for any possible short-term breakthroughs. Now, looking at possible sentiment shifts to trade, scenario one, doom and gloom. So the baseline for the pound is tilted to the downside this week. And unless there's any real significant positive breakthroughs, we would consider any short-term rallies as opportunities to add to the downside. Now, something that could exacerbate the selling, of course, would be a huge backing from Parliament for the passing of the internal market bill, as that would basically increase the likelihood of a no deal and even possible legal action from the EU. Now, there isn't any real expectations, as we said, for changes for the BOE this week, but if they do come across more dovish than expected and stresses the need for further stimulus and possibly hinting at a slightly higher possibility of negative rates or adding QE, that would also add to the downside fuel for the pound. Now, a trade plan in that scenario, so we would expect the pound to sell off across the board, especially against the euro and the dollar. And ING Investment Bank actually sees a very high probability of the pound dollar reaching 125 and the euro pound reaching 0.95 in the week ahead. Scenario 2 would be divided support for the internal market bill. So if the Parliament debate shows a huge amount of pushback against the bill and markets start thinking that there is a possibility of the bill not passing, that would create some short-term relief for the pound, also adding in the possibility of a less dovish than expected BOE and basically pushback from them against negative rates or against additional QE. That could see some unwinding of recent shorts as well. Now, we would expect that scenario to see the pound strengthening across the board, but especially against the euro, with the euro pound pair seeing a tremendous move higher to the upside in the past week.